Good day, everyone, and I want to welcome you to our 42nd episode of In Conversation with Convergence. My name is George Evans. This is a monthly podcast where we feature our clients and special guests. We help you get to know market leaders and some of the top issues that are facing the industry today. Today, I'm joined by a great company and great client, Domus, and I want to introduce you both to Jessica Mead. And Jessica is the regional executive for North America for Domus, and she's also a member of the group executive board at Domus. Tom Gandolfo is the head of sales for all of North America, and I know Tom. I've recently met Jessica, but I know Tom for an awfully long time. Listen, I want to welcome you both, and thanks for joining me today.
Thank you, George. Appreciate being here.
Yeah.
So, for having us.
Jessica, let's start with you. One of the first things I always like to do is have our audience get to know you a little bit, your background, your pedigree, and how you kind of got to where you are today and what you're responsible for. And then Tom will do the same with you.
Absolutely. So thanks for having us today, George. It's really nice to be here today. So a little bit about my background. I actually started my career following law school in the global securitization and trust services business at LaSalle Bank, ABN AMRO at the time, working on CDOs, CLOs, CMBS transactions. Was there a few years, really enjoyed the work. Definitely not something I learned about in law school. So it was all new. It was all new to me for sure. But shortly after my career there, I left the bank and joined Cortland Capital Market Services, which I was one of the founding members at the time, along with our CEO Doug Hart. Spent time at Cortland, kind of shifting. We happened to open at the time that Lehman Brothers went under, so the business shifted from what we thought it was going to be into something new, starting with fund administration, along with supporting the debt capital markets business on the agency side. At my time at Cortland, I actually ran the legal team as well as the risk and compliance teams as well. And then about 10 years later, we were acquired by Domus, which was a very exciting point in time in our career. And started then at Domus, starting with the legal team as well, and the risk and compliance team, sitting on our group executive board, working in a global role at that point. And then about 3 years ago, moved into the regional executive position for North America.
Terrific. In fact, I think, Tom, correct me if I'm wrong, I think our relationship with you started when you were Cortland, pre-Domus, I think, right? Because we're about 12 years old. Tom, your background for our audience.
Sure. Thanks, George. So I started my career at JP Morgan in one of the kind of general analyst programs and kind of worked my way into the securitization market shortly thereafter, and spent about 6 years in securitization, largely around kind of ABS transactions, asset-backed securitizations, mortgage-backed securitizations. And then I made the move over to Wells Fargo to start up their CLO business. And spent about 12 years at Wells Fargo, moving into kind of like more of a head of sales role for their CLO business. And then, fortunately for me, right about the time of the Cortland acquisition by Domus, I joined what was the very newly formed Domus team in North America as their head of sales. So I've been with Domus for about 6 years now, focusing very much on kind of building out the relationship management model, our sales go-to-market, working with marketing on our product offering, and working very closely with our European colleagues in terms of kind of cross-border clients and cross-sell initiatives. Also, through our history of the last 6 years, we've done a number of acquisitions in the U.S., and a lot of my focus has been on kind of integrating those commercial teams. So acquiring Strata Fund Services, as well as, Cortland, the Carta Group out of Darien, Connecticut, really bringing all of those teams together. So one Domus and kind of one message to the marketplace.
Yeah, thank you. It's interesting to watch you guys because we can watch your growth, right? We know client you have, every fund you service, and it's been a pretty impressive story. And I always mention, well, everyone thinks this market's consolidating, right? There are about 640 fund administrators. When we started Convergence 12 years ago, there were 400, and I think it's very easy to hang a shingle, but really all the growth is at the top. And when I look at the European administrators, especially, right, the Apexes and JTCs, and go down the list, you guys have done extremely well. It's been I think one of the things we hear in the market a lot is how well you've integrated some of the acquisition activity that you've done. So I'm sure we'll get into that a little bit. Jessica, I'll direct this at you, even though I said I wasn't going to direct things. Why don't we start with just an overview of Domus quickly for our audience? It may not be a household name to everyone, and I'd like you to just kind of give an overview, and then maybe Tom, we can talk a little bit about Cinven and some of the recent transactions that you did.
Yeah, sure. So Domus is relatively new to the US. However, it's a 20-year-old company headquartered out of Luxembourg. Started actually as a spinoff of PwC. So some partners left PwC and started a corporate services business in Luxembourg, which then quickly grew into a fund administration business as well. The footprint is across the world. We have offices all over Europe, APAC, as well as the US. The US actually is newer. That side of the business is relatively newer. Started about 2017. So just prior to the Cortland acquisition, we did a lift out here in the US of a real estate firm. And so that was kind of the beginnings in the US market. But grown very quickly. We're over 5,000 employees now worldwide, about 1,600 of those in the US, and focus really in a few different areas or a few different lines of business, from private equity, real estate, and credit, as well as a really strong corporate services business as well. So, we like to say that we're able to be where our clients need us, and it's really true. So, even just speaking from a U.S. perspective, we have a lot of clients who are interested in Luxembourg vehicles or Irish vehicles, et cetera, to support their growth, and we're able to handle that for them, which I think is really sets us apart from maybe some other administrators who maybe have to outsource that kind of work, who aren't able to be fully integrated across each of those.
Yeah, and about how many jurisdictions would you say you're in, give or take? I don't want to put you on the spot, but
yeah, so 14 regulated jurisdictions, and then we have some smaller areas that are not regulated as well.
Yeah, and that's of great appeal, right? There's only a handful of large administrators with that kind of global reach. Tom, talk to me. You mentioned some of the acquisitions. I know there's a recent one called Cinven. Maybe you could chat about that a little bit.
Sure. But before I actually get into Cinven, just to kind of piggyback on one of the things that Jessica said. So, as you know, we are in 22, 23 countries right now. So very much kind of global in scope. But one of the things that made, I think you mentioned, our success with acquisitions. The acquisitions were very strategic in terms of filling in the gaps of Domus. We didn't just acquire for acquiring sake of getting bigger. So when you look at kind of how the footprint in the U.S. expanded compared to Europe, we've always been an alternatives player. We've always focused in those core asset classes of private equity, real estate, and private debt. And when the acquisition kind of started with Carta out of Darien, Connecticut, that kind of plugged the private equity hole. Mm-hmm. And combining Carta and Cortland with the capabilities of real estate and private debt, now you kind of had a very much a platform that mirrored what was in Europe. So we were much more successful in being able to kind of cross-sell existing clients that were across those asset classes. And then really from there, it was, again, kind of filling in the gap. So you looked at the other acquisitions that we did, we did not have a private equity presence in Boston. So we picked up a small administrator, IPS. We had less of a presence on the West Coast. So we picked up Strata Fund Services, which also focuses on venture capital.
Yeah.
So, very much kind of strategic from that perspective. And when we did acquire, we didn't leave these businesses in a silo. It was the integration of the management teams, the integration of the tech stack that I think really kind of separates us from a few others. It's a longer process, but we think a better long-term solution. So, little bit more of kind of the background of how we came to be the size that we are today. And then referencing the Cinven transaction. So as you probably know, we've had Permira as a minority shareholder for a number of years, for about 6 years they've been in the investment. But we've always kind of majority owned by the founders, and also employee ownership. A number of employees kind of have a equity in the business as well. So, Permira was really kind of towards the end of the life cycle and looking for a good partner to kind of grow with for our next stage of development. And Cinven was chosen as that partner, and we really couldn't be more excited. What's also very important to note is that the founders, as well as Permira, are actually all staying in Domus as investors as well. So none of them are kind of leaving the investment. They're just kind of taking down their positions by about half. And Cinven is kind of coming on board as the new majority shareholder. So that transaction that has been announced, it'll close probably in about a month's time frame. But we're already kind of very much, integrated with Cinven in terms of what their operating model looks like, and they've been very involved in terms of just bringing the value of the Cinven franchise to us. So they've helped make introductions to prospects. We've had calls around. They've had a lot of proprietary information that they've helped us in terms of managing our business, and they've also. We've also talked about supporting their own infrastructure. So, they're very much looking to kind of, support us from a market perspective, but they also feel that they have their own kind of holes to fill from an infrastructure that we can help fill those gaps as well. So it's still very much kind of early days, but really, really optimistic about, the next stage in our growth.
Yeah. Well, thank you. That's a great explanation. What's interesting when you think about the fund administration world, right? We're just seeing a much heavier investment these days by private equity firms in general, right? You saw big transactions with firms like Gen2 and others, and in fact, I'm giving a talk out in Las Vegas in a couple of weeks about, unrelated to what we're talking about, but private equity investing in professional sports. Right. The NFL just approved 10% investment by private equity companies. So just the whole world of private credit is just a fascinating world to me. We talked a little bit about kind of global, your footprint, right? And Jessica, maybe one of the things I've always known talking to Tom is the pride you guys take in what you kind of call your global relationship management model. I think that sets you apart a little bit. So I'd like you guys to comment on that a little bit for our audience.
Yeah, I'm happy to start. Maybe Tom, feel free to jump in. This is your world. But what I think is really critical for our employee or for our clients, our employees as well, actually, is this global relationship model that we have built. I think it is what our clients want and need. So you may have a U.S. manager who has products in Europe, but they really want one person to call or one team to call to understand, what's going on. Really partner with them and help them kind of with their growth in the future. And I think when the team fully is integrated and understands kind of that manager from end to end, no matter where they're growing, it really helps to be able to allow for their growth, but, really fully be able to grow with them in the future as well.
Yeah.
I think it's critical. We hear from clients often who feel like they have a different team, in Europe, or maybe they've worked with other administrators in the past, and it just is not seamless for them. And so we know that there's other regulatory requirements, there's timelines, there's, just different needs depending on the jurisdiction, and to be able to have the experts in the field, but then pull up into a global relationship model. I think it's really the best.
Yeah,
that we
so
can
they have a point person that then can work your subject matter experts around the world, right? Okay.
And George, just to kind of add to that, I think, in terms of a successful relationship management model, internal communication is the most important thing. So the more touch points you have with your teams globally, the better that you're going to be in terms of understanding, where things are with the relationship across different services and sectors. And, I think that our model is really a reflection of where clients also expect us to be today. If you look at many of the the new RFPs that are coming out there, they're global in scope.
Mm-hmm.
They're global across products. They're also global across regions. I mean, many of our largest GPs and asset managers that we work with, they have operations in Asia and Europe, and they want a consolidated, approach to how they're servicing their funds. And I think, having somebody that can satisfy from a geographic perspective and a product perspective is really going to be important as in the next stage of kind of how this market develops, because the GPs, the big are only going to get bigger.
Right.
Now, we've seen this consolidation of the asset management community. We've seen it within our own client base. And if you are not global in scope, if you don't have a multi-asset class kind of expertise, you're really going to be left behind kind of when the market kind of is moving in that direction.
I agree 100% with that. So let's shift a little bit. Even though we're here, it's hard to believe it's October 1st, right? And we're in the fourth quarter. And I know we're probably all have been in 2025 planning sessions already. But I wanted to talk a little bit about, now that we're 9 months into 2024, but like what was your kind of 24 agenda? What do you think some of the biggest accomplishments were for you in 24 as a firm? And then I want to move to 25, right? A little bit, which I'm sure you're talking about, but things like, I'm sure you're looking at like technology and really how to grow profitably and continue to look at middle and back office services and the like. But, I'd be interested if you had to like give our audience, hey, here are the top 3 or 4 things we accomplished in 24 or are in the midst of concluding, what they would be.
Do you want to kick it off, Tom, with the tech piece?
Sure. So I think, I'll just kind of broad brush 3 or 4 of the kind of, I think, major initiatives that are all underway. But, when you look at our business today, I think, we're at a stage where we're looking for profitable growth. We don't want to be everything to everyone, but we really want to pick clients that, we can scale with, we can grow with, and that are really going to see us as a partner. So I think profitable growth is very, very important to kind of, to always kind of have your eye on the prize at the end of the day. But definitely in terms of our tech roadmap, we've invested a lot of technology. When you talk to clients today, what's most important to them is kind of data, access to their data. How are they viewing their data? What kind of APIs do we have?
Yeah.
So a lot of focus on, communication, tech communication between ourselves and the end user, the client. So, increasing the user experience around our portals, being able to kind of upgrade the dashboard technology. We've also been very focused on enhancing kind of workflow technology between ourselves and clients so that clients could actually see, where we are in the process of developing the financial statements and really, take the email traffic out of the equation and replace it with a system that is more transparent, it's audible, and the client could kind of go in at any time. That's kind of being developed across the board for all of our business lines. I think that, we have an investment in a data and analytics business. So, we talked a little bit about the acquisitions, but, the integration of Solvis, we purchased Solvis last year. It was a couple hundred employees, very much focused on kind of the software space in regards to private debt, middle and back office related to CLO compliance, related to loan administration, agency. So integrating that into the broader business has been a major focus for us as well. But we're also expanding a lot of products in terms of our data and analytics solutions. So we've done things like, also related to private debt, like financial statement spreading, helping clients get financials into their downstream systems, things of that nature. So that's been kind of a big piece of it. And then, we talked about middle office, but, in terms of our brand across middle office, we do so many different things that really kind of packaging those solutions together in almost I don't want to call it a middle office in a box for private debt. Yeah. But when you look at kind of our platform, we own a lot of the technology that we utilize, which is unique in our space, to be quite honest. We own our technology around agency, around trade settlement, now CLO, middle and back office. We also own our accounting platform. We internally call the VBO for private debt. So packaging all of those solutions together to be able to not only satisfy customers in fund structures, but their other needs outside of fund structures. So, being able to kind of do that end-to-end process within the back office of a private debt manager for middle office has been a major focus for us.
It's an interesting model you have with the technology because it is unique, right? People are buying a lot of administrators have the same technology and it's as I'm not telling you both anything you don't know. It's a double-edged sword, right? How do you not make it a money pit, right? And how do you scale it? But it creates great flexibility for you with clients that maybe others don't have. Anything you would add to the 24 agenda?
Yeah, so a couple of other things, maybe Tom started to mention it too. We did the Solvis acquisition about a year ago, but one of the things that allowed us to do was actually open offices in India. So Solvis had about 90 employees in India. And so now we're taking a look at India and trying to decide, okay, how do we think about India going forward? We do own our technology. There's a great group of developers in India that can help us even further accelerate our roadmap from a technology perspective. So opening that office. And then the other office we just recently opened is in the Philippines. Also as part of, you may have read the news, but part of a partnership that we did with one of our clients, Partners Group. And so now we have capabilities in the Philippines as well. So as we think about profitable growth going forward, there's a lot of talent in these areas. And so one of the big accomplishments for us this year.
Yeah, well, I mean, listen, we're big believers in that same model. We have a offshore presence here, and beyond the obvious labor arbitrage and I'll call it time arbitrage, right, where you can take advantage of that. We've been very impressed with the quality that you get out of somewhere like India or the Philippines.
George, one other thing to kind of add on that note is that Jessica mentioned kind of the Philippines and India, and it seems like strategic outsourcing is a huge trend in the market that doesn't seem like it's going to abate. And I think capitalizing on that. So Jessica kind of touched on it, but that opportunity with Partners Group was a complete kind of lift out. So taking over all of their kind of middle and back office functions for all of their from across all the geographies and all of their asset classes. So major initiative. And kind of executing on that has been a huge focus for us. It goes back to our global relationship model because something like that needs to be managed globally. But we've also kind of been working on similar type of, making sure we've executed on other lift outs in the United States. So we did a real estate lift out over the last year of about 20 people where we opened up an office in Seattle. We've also done other kind of co-sourcing arrangements. So, I mentioned that clients want access to their data. Sometimes they choose to kind of have platforms in-house, and we'll actually work on their platforms. So that's been an increasing trend as well. So being able to kind of execute on those various business models and provide kind of, positive customer experience has been really important.
Well, lift out, I echo that. Lift outs and as you know, we did some work with you guys early on identifying lift out targets, which has continued to get more sophisticated. I personally think COVID changed everything with lift outs. People who built things and were very protective of them all of a sudden realized, hey, I've got to deal with remote workforces and hiring, talent acquisition and some of these things that maybe were taken for granted for a long time really changed the game. I think the other thing, in my opinion, that changed the game was some of the multiples that are being paid for fund administrators are off the charts. And if you can go out and do, 5 lift outs or 10 lift outs, you can do them much more economically. And it's a win for both organizations because, if that cost is being borne by the management company, for example, right? It's a big win, right? But being able to your point, Tom, I think being able to be able to step in, take over certain functions. A lot of people don't do the big bang lift out day one, right? They kind of want to date before you get married, right? And look at certain functions, right? But being positioned to do that, there's probably under, in my opinion, and we, as Tom knows, we deal with them all. I think there's only about 10 administrators, maybe 8, that actually, have a viable lift out model where they can really take on, lots of different functions and sequencing them maybe differently for every potential client and prospect. So it's an interesting time for lift outs. I think it's a big opportunity, so let's go to, as we just finish up 24, and then I just want to, we'll really finish up with 25. What did you guys think about 24? And I always like to ask about, like, what was the biggest headwind you had as a business, and maybe what was the biggest tailwind you had as a business? Things that helped you, right? Just I'll throw that out to you guys.
So
go ahead, Tom.
Okay, so just some general market. I think from a headwind perspective, we know that fundraising, hasn't been as strong this year as in years past. I think everybody's kind of aware of that. But we've also seen, kind of looking at different sectors, a lot of our open-ended, from a client perspective, open-ended funds, saw a lot of redemptions. And I think from a client perspective, they became a lot more cost conscious and really kind of looked to kind of stabilize the book, which did a couple of things. One, it focused on the existing funds, and they were slower to launch new funds. And the slower fundraising caused a domino effect where, the existing funds didn't get to certain levels of allocation to where they could then go launch that next fund. So everything kind of got staggered up a little bit from a market perspective. But those, I think, are very much short-term, kind of headwinds. When you look at the market overall, all of the surveys that you hear the research groups do, is alternatives are a growing asset class.
Right.
Will continue to grow over the next several years, double-digit growth across really the main sectors that we play in. The private equity space and private debt in general, are really kind of growing beyond the market. And I think when you talk to kind of LPs, you're hearing the same thing. They're increasing allocations to alternatives, and when you combine that with kind of like a growing retail market, really the future looks very positive from our perspective. So, that's really kind of having our eye on the prize when we think about our strategic initiatives today and what we're focusing on. We know there's a little bit, kind of bumps in the road on the short term, but long term is still kind of.
Well, yeah, I think the democratization, right, of alternatives, right, is what we would call it. Is it's hard to believe that we're not far away from somebody, having a choice of hedge funds and private equity funds in their 401k plan. Right. Right. Jessica, would you add anything to the tailwind, the headwind conversation?
No, I think Tom has hit it, but I do think as we head into the fourth quarter, we're starting to see some of that pressure alleviate at this point. So we're hearing from clients, their fundraising is now accelerating. They've been able to sell off some assets and just have some more room there. And so I think looking ahead into 2025, I do think that we'll start to see the pickup, and it's already happening in the fourth quarter.
Perfect. Okay. And then let's just finish up then. I find with yes, people have a limited attention span, right? We keep it about 30 minutes. I want to talk about 2025, and maybe Jessica, you could kick that off in terms of, as you go into the new year and you're planning, kind of what are without giving away the secret sauce to your competitors here on the podcast, what are maybe some of your larger plans?
Yeah, so as Tom had mentioned previously, we're looking forward to closing the acquisition or the investment with Cinven coming up probably later this quarter. So that's really exciting, and I think it sets us into the right path as we head into 2025 from a strategic perspective. We're always looking at potential acquisitions. How do we continue to grow? From that perspective as well. So looking forward to what may come, over the course of the next 12 to 18 months from that side of the house. continue investment in technology. I think, what Tom had mentioned is exactly right. Our clients want more access to their data. And so how can we help to facilitate that, to continue to help them grow, provide information where they can then push it into their downstream, because their LPs are asking for that information as well. So I think it's a little bit more of the same, but in a bigger investment way.
Yeah, makes sense.
Yeah.
Tom, anything you want to add?
The only thing I'd add to that is kind of an increased emphasis on brand awareness in the U.S. We can do so many things, for so many different jurisdictions. I think, some folks still kind of see Alter Domus as that kind of corporate services player, out of Europe. And when you think about the history, it's understandable. And, our short tenure here in the U.S. But, given kind of the breadth and the scale that we have today in the U.S. across various products, I think getting the word out a bit more from a brand perspective is going to be kind of a major focus.
This podcast gives you a great opportunity to market, right?
It's wonderful.
Tom, one last question for you, just as the head of sales here. In a nutshell, if you had to say the elevator pitch, like what are the 2 or 3 things that you think differentiate you guys against the rest of your competitors for our listeners?
Well, I think everybody kind of says that it's table stakes today, but I think the blocking and tackling of having a great team service your account can't be overstated. And we hear that most often from clients. They love working with our team. They're product specialists, and I think that can get a little bit lost today. Where we see a lot of inbound inquiries is when our competitors lose sight of that. When there's turnover, and they're replaced with people that don't know accounts so well, and clients feel like that they are training, their administrators.
Yeah.
Those are the types of things that sometimes get lost in kind of our greater conversations. But at its core, that's really what we do, and it comes down to the people. So I think that that can't be highlighted enough. But when you look at kind of our platform, the global nature of our business and being able to kind of satisfy, this vertical kind of chain of a structure where we can actually, sit at the top at the corporate services level, providing board seats, corporate secretarial services, then kind of working its way down to kind of, the fund accounting, striking the NAV, and then further down to, one of the businesses we didn't talk that much about is kind of our debt capital markets business, where we can service kind of at the asset level. So, being able to provide agency services, loan administration, commercial loan servicing, things of that nature, really puts us in a unique position to be able to satisfy, kind of all levels of
that last point,
investment structure.
That's what we talk to everyone. We have a lot of admin clients. That's the branding, I think, right? That has to happen, right? Because we know that you're excellent at it, right? And I think you've got to find a way to make sure the market really knows that, right? Inside and out. Well, listen, I want to thank you both. Great conversation, and you guys have been a terrific client. And I think we've had a great partnership around helping you really pursue the market. And so thank you both. It was really nice to spend time with you today.
Thanks. Appreciate the time, George.
All right.
Thank you.